The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks, and I want to wish everybody a happy Cinco de Mayo. It's a big thing here in Arizona because we're only 72 miles from the Mexican border, so it's a big holiday here in Tucson, so it'll be quite exciting. Not for me because I don't participate in any of that stuff, but the city certainly does a whole lot of things. I wanted to start the show by thanking Basil for telling that gentleman on the phone and the other folks that were listening that if they'd never sold short before, that's something that they really ought to try to learn to do. When I was in graduate school, it was a real treat because we had a lot of guests coming in at Indiana to give talks. We had Charles Schultz, who was director of the Treasury. We had Paul Samuelson, who was one of my favorites. He was a Nobel Prize in economics. And I'll never forget, I was already trading. This was in 1965, and I was already trading quite a bit because I was in silver and some other things. But the thing that was really interesting is Samuelson got up and he was talking to the MBA program, and he said, folks, he said, let me tell you, if you go out and learn how to sell or just sell a contract of soybeans short, he said, you'll learn more about economics than you will in any of your classes that you're taking here at Indiana. And everybody laughed. But, I was thinking, I said, boy, he's probably right. And that was one of his, famous sayings that he said, because you do learn a lot because you learn about supply demand, you learn about margin, you learn about risk control, you learn about heartache, you learn about ecstasy. Well, not the drug, but the feeling. And so it was really interesting that you should learn how to do this because the markets, they've been going up straight for so long that it's just they won't do that forever, but they will for most of the time because we live in a great society. I heard a statistic that over the weekend that absolutely blew my mind. You probably won't believe it when you hear it, but if you would have put $10,000 into Berkshire Hathaway in 1965 when Warren Buffett was just starting out, you'll never guess what that $10,000 is worth now, leaving the money in, not taking out any dividends or anything like that, just reinvesting the dividends. Just a little over $135 million. From 10,000 to 135 million. That's a compound rate of 22% a year over 50 years. From what the guy said on the TV. I don't know if that's true or not, but that's what the rate is. I went in and checked something close to that anyway, but that's really phenomenal. I mean, no wonder he's so popular and everything. And with his meeting that he had this week, it reminded me, especially today, because when he was on the show for CNBC today, being interviewed by Becky Quick, the market was basically up a little bit, but soon as Warren Buffett started to speak, the Dow just kept going higher and higher and higher until it got up over 100 points. This reminds me of what happened in 1998. In February of 98, Warren Buffett was on CNBC, and of course CNBC was young at that time. I believe it was only 3 years old, as I recall, and he was being interviewed by, oh, gosh darn that. Brain warp here, but he was being interviewed and he, never mind, I'll remember it anyway. But anyway, his comment was that his Berkshire Hathaway owned 25% of the above ground silver. They were heavily involved in silver, and he was really looking for higher prices in silver. This was February of 98. When the report came out for Berkshire Hathaway in March, there was no silver in Berkshire Hathaway. He had sold it all. And I'm sure he used it during that time because I looked at the March report, the February report, I looked at the March report, and it was really amazing, how quickly he did it. Now, the market during that time while it was rallying, rallied up that day to the exact 61% retracement on the weekly chart going back to 1987. I remember this because I happened to be in that trade, and I was looking to sell it, and I don't care what people say, so I just went in and did it. So be careful, because what people say and what people do are, a little bit different, because they have sometimes have an ulterior motive of what they're doing. And so what they'll do is they need a lot of liquidity to get out of some of this stuff. Now, Warren Buffett he doesn't trade. He invests in companies. He's a brilliant man, but he does use timing and stuff. I'm sure he does. And when you hear him say something, I'm sure it's good all the time, most of the time. But just be very, very careful. The reason why I say this, twofold, from what happened in 1998, but I got a phone call this morning from one of my friends who attended the meeting for Buffett because he owns some Berkshire Hathaway for his son, who's, I think he's 10 or 11 years old. And this gentleman has done very well for himself, and he's a physician. And he told me that he was so impressed with what Buffett said. He wanted to buy $1 million worth of stock, and he asked me what he should buy. And I said, why don't you wait a week or two, just to think it over a little bit. I mean, $1 million is a lot of money to come by, but I told him, I said, I don't know what to buy. I said, here at these levels, I just really can't suggest anything. So just be careful what people say, and that includes me, folks. For what I say, and what happens to some of these things is really they're two different things. You want to be very, very careful of that for sure. Now, the first chart that I posted in here today into Tiger TV is a very, very important one. It's the chart of the Treasury notes. As you can see, we're making a Gartly pattern. We hit it early this morning. We rallied a little bit, only 10 or 15 ticks from the fib point. We've held it so far, but the rally in the Treasury bonds has totally collapsed. And that's the reason for the next chart that I want to show you, because of the harmony that we're looking at here in Treasury bonds is really, really quite amazing, especially if you believe in markets repeating themselves over and over again. This is something that you might want to pay attention to. At least that's what I'm doing today. And that is, if we look at the low from we made back on March the 8th to the high we made back on April the 3rd, that time up is equal to the time down today. In other words, that was W.D. Gann's theory that time up equals time down in cycles. But if we go back and look at it just over the past month, from the high we made back on April the 4th to where we are right now on May the 4th, 30 days, you'll notice that we had 3 segments of 7 down days and then a rally. 7 down days, then a rally. 7 down days, then a rally. And this is the 7th down day. So that's what we're looking at. We're coming in where price and time are basically squaring up, and it looks like it could turn. We have a potential target here of about 156. We're trading at 156 and a quarter now. But what is a little troubling here, if you're looking at the Gartly pattern, is the fact that you had that huge wide-ranging bar of 2.5 points on Friday, and then we broken through the 786 retracement here in the Treasury bonds. Now, the Treasury notes. The Treasury notes, that's the one that I posted in the room first, which is the larger market. It's about 6 times larger than the Treasury bonds. That is still at the 61% retracement. We have not made new lows on the day from where we were in the middle of the night. We have done that in bonds. They've broken quite a bit, but we've not done that yet in the Treasury bond. So this is a really key level that we're watching here in interest rates. Folks, interest rates are going higher. We're already seeing that. The Fed isn't making interest rates go higher. The market is making interest rates go higher. What's going to happen when they come up to, they have to make a decision on what's going to happen next and how they're going to get out of this is going to be really interesting, because whether they hold these bonds for 30 years or not, I'm not sure what's going to happen, but it's going to be a very interesting part of liquidity in these markets once we see these things start to come home, but we'll have to wait and see what's happening. We have another market that is at very, very critical level today and is held up extremely well, and that is the gold market. I've been very bullish for gold for quite some time. We were looking for a price to come down to just about that 1170 area. We did get there, and we've had a pretty explosive move to the upside so far today, and we'll see if it's going to continue to hold that level, but at least it's held the level that we've had the first time. This is just a rally back. There's nothing really exciting here to hang your hat on, but that's pretty much what's happening. What's interesting is that silver, which has been the laggard all along, has really picked up steam today, and that has been the one that has made the metals go, really quite a bit higher. We're up about $12, $13 in gold. We're up about 50 cents in the silver. So we want to, keep that momentum going if you want to go from the long size, because that's what you're probably want to try to do anyway. So that's what we're watching now. There's another market that I think has a potential to be making a major top in here. We're going to cover that more after the break, but it's the dollar index. We covered this last week a little bit on Wednesday because of the fact that it was completing this big ABCD pattern. It has since held that and started to move upward. So that tells us that possibly the ABCD pattern that we're having here in the dollar index is complete. It's taken 6 weeks to finish it up. This is the first major pattern, ABC pattern, the first major one. We've had a couple of smaller ones, but this is the first major pattern on the ABC format for the dollar index since this thing started about 18.5 to 2 years ago, when our fearless leader Tom O'Brien was screaming King Dollar and nobody would listen to him. And of course, they proved to be wrong and he proved to be right. So this is a really important spot that we're looking at here in the U.S. dollar. That equates to 113 in the euro, which held up pretty well. And that's what, by the way, I did remember the girl's name was Sue Herrera, and I should have remembered. I mean, I've been out to dinner with her so many times because she was dating my good friend Jay Cross. That's when she was at FNN, the Financial News Network in Los Angeles. That was back in the late 80s and late 70s, early 80s. And that operation came unglued, I believe, in '92. It was owned by Merrill Lynch. And another gentleman's name. Oh boy, I'm losing these names. This is a bad sign, Larry. Anyway, Sue moved to New York to make a presentation to NBC to do a financial show, much like CNN. And they said, "Yeah, let's do it." They took it as an experiment, and believe me, folks, it made big money for everybody. So I'm very happy to see that everybody was really involved with this. It was a lot of fun growing up and that kind of stuff. I was able to meet Bill Griffith. I knew Ron Insana when he was still a graduate student at USC. So those days go by pretty quickly. Now, Basil also talked a little bit about the VIX index, and we have made new lows today, and we will cover that. We got to take a break here. We got stocks quite a bit stronger. Gold's up a little bit. And interest rates are rising due to the lower prices in bonds.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and what I'm going to do is I posted a chart of the euro, and as you can see, this is going back over the past month, and we've had this first large ABCD pattern. That's just the opposite of what we're looking at in the dollar index, of course. And Gartly said, to sell your big ABCD corrections in a bear market and buy the ABCD corrections in a bull market. So, that's really what we're looking at. The euro is the largest of the cross rates that are traded. And as you can see, it hit it almost exactly within 6 pips of the exact number, the 786 number. And what I usually do is I go to the second largest cross rate that I watch anyway, just because of, I want to see what other people are watching anyway. I don't trade this one too often because the euro gives me enough things to look at. But if you'll take a look at the euro versus the Japanese yen, you'll notice that it also rallied to a 382 retracement of the high we made from way back in November. And it was also a 1.618 expansion of the high from March the 17th into April the 15th. That came in exactly, and it was up 13 days in a row. And what I'm doing is when these come close to those numbers, I'm watching it very, very closely to see that if it's going to bust through there, and what kind of action is there. And it was really amazing to watch it, because every time it got anywhere near 135.10 in the euro yen, it would be repelled, back quite a bit. Never got above that level at all, and then is sold off well over 100 pips in just a few days. Whether this is going to be a major top or not, it's still too early, but you can't really say very much because it's just way too early. Now, if we take a quick look here at one other cross rate, and I want to show this one to you folks. Oh, give me a second here. My trusty little mouse here has left my hand. Hold on just a second. There we go. Okay, as you can see in the British pound, since last July, we've had several rallies. One was 600 pips, another one was 600 pips, and this last one that we had on Friday, excuse me, not on Friday, on Wednesday of last week, came in at 900 pips. So this tells us that's the strongest rally that we've had since way back in 2014. So this gives you a barometer to look at with the pound. As long as the pound stays below 155, we're most probably going to go down one more time, at least to the 147 and possibly the 143 level in the British pound. Whether there'll be enough new economics, because Princess Charlotte has entered the picture now, the little baby girl, and I wish them all the best, because they're going to, I don't know how they're going to be able to raise that child. I hope they have a nanny or something, because, boy, that's going to be a lot of work. Boy, you talk about a kid being born with a diamond in her mouth. It used to be a silver spoon. This kid is born with a whole diamond in its mouth. Pretty good. I wanted to talk just quickly. Someone's asked me over the weekend about some of these stocks that have gotten massacred here recently, and I just wanted to bring a couple of them up here to talk to you about them. First one, we're going to take a look at LinkedIn. This stock got absolutely massacred on Friday. It was down over 20%. As you can see, when it was making its top up there at 274, we had several ABCD patterns measuring into that 270 zone, and then went sideways for a while, and then it was going down. I mean, it had lower tops, ever since February, so it was not really a that much of a bullish stock. But there's one other one, and that is Twitter. And folks, I don't belong to any of these what do you call these, social networking things. I just think that there's just too much information out there that is going to be used against you. But as you can see here with Twitter, this has been a very bearish stock since after it was initial opening. We ran from 37 to 75. It doubled in price. They got everybody in it, and now it's down about half again where it was. That goes back to what Bernard Baruch said in his book, his autobiography, My Own Story. He said the greatest scam in the stock market was to inflate something to a high price. He said if you do that, you'll get people to buy it all the way down thinking that they're buying value. So keep that in mind. You've got to be able to watch it. I know it's different this time, and we don't have a bubble and all that kind of stuff. But when you see stocks drop like Twitter and LinkedIn and there's been a few others too, that is really it's really quite big. Now, remember, we had Amazon just did the opposite thing. A few weeks ago, Amazon jumped up 15% in one day. Hasn't gone much higher than that since that time, but that can happen, on either side of the coin. So we are living in interesting times, no question about that. But just use a little common sense and listen to Basil and Steve and Tom and little Tom. They'll help you out. Okay, we're going to be right back after these words. Stock market's still holding up good, and we'll be right back in a few moments.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted a chart from our friend Bill Meridian from Cycles Research in Vienna, Austria. Bill's actually traveling for New York for the next couple of weeks. He has a place there that he stays at, visiting some of our mutual friends. But this chart that he shared with us last week is basically a rough idea of how cycles form, and this particular one that we're looking at could have peaked in March. It might have been April 27th. We don't know, but it says that we could be coming down into August, which is what we're looking at if we watch the Bradley model. It's part Bradley model and part a few other things. Bill Meridian, he goes to at lengths that far, far beyond what this old cowboy's pay grade is, because he's one smart puppy, And between him and Alfie Lavoie, when they do these things, they are very, very comprehensive. And all I try to do is to match up the patterns. Now, we're having this really strong rally that came off of the bottom that we had on Thursday that was spot on at the 61% retracement in the S&P 500. It couldn't have been any more perfect than it was. It was just really had a beautiful ABCD pattern there, and we've exploded to the upside. And it's certainly continuing to go higher. Whether we break out the highs that we made on April the 27th remains to be seen. We've gone up to above the 786 retracement in this S&P. We've also done it in the Dow Jones. We did it in the NASDAQ also. So we're very close to taking that high out. And if we do, that's going to be a sign that this market could possibly go a whole lot higher. So that's the key level, is what we had on April the 27th. That's a really, really important level. We've came off the bottom here faster than we've even faster than we did back on the 22nd. From the 30th, in just 2 days, we've rallied more than we did in the last 5 days of the rally. Now, part of that is related to Mr. Buffett's comments about how bullish things are in the world, and his comment was that because interest rates are low, stocks are artificially lower than they should be. Because if interest rates were higher, he said stocks would probably be a lot higher. I don't quite understand that rationale, but that's what the Oracle of Omaha said, so we must listen to what the gentleman says and respect his judgment, because he's certainly a very successful person. I'm doing the technical part of this. I don't understand the fundamentals. I tried years ago, but it was not anything that I could lay my hand on to get any type of a way of looking at this. Now, there is a couple of things that are still going on that I think are very important. I spoke to Arch Crawford over the weekend, trying to get him as my guest, but he was traveling, so he wasn't able to do it. But he did share with me his thoughts on the Dow Jones theory with transportations and also with the utilities. And both of these, both the transportations and the utilities are not confirming that this is a new bull market to the upside. So you want to keep that in mind. The Dow theory has worked for many, many years, folks. Hasn't worked for these last 4 or 5, but over a period of a long time, it's been pretty hard to ignore it. And the reason for that is the theory is that if the transportations don't make new highs when the Dow Jones making new highs, it tells you that the transportation companies, the railroads and the trucking companies, UPS, FedEx, are not getting their orders as much, so their earnings are not increasing like they should. The same thing with utilities, is they're not using as much utilities for production of goods and services. This is what the theory says, and it goes on to the stock charts. This was promoted by the Dow theory was Richard Ray. Richard Ray, R-H-E-A, back in the, oh my God, a long time ago. Robert Ray, excuse me, not Richard, Robert Ray. And then later on, it was taken over by, I think it's time for Larry to head for the end of days nursing home. Oh my God, I know these people like the back of my hand, and I can't even think of their names. I miss Sue Herrera. Oh boy. I want to get somebody get my Richard Russell. Thank you very much, Terry. I appreciate that. I know him very well, and I can't remember his name, so who knows. One good thing was the horse that I wanted to bet in the Kentucky Derby, International Star, he was scratched. He had something wrong with him, so he was not able to run. And so I was standing in line to buy a ticket. And I got on the cell phone to my friend in California who knows horses, and I told him that the horse I wanted to bet was, not going to run. And he said, well, bet on Firing Line. He said, Firing Line with Gary Stevens riding. He said he's got a good chance. And he said, bet it with a horse called Upstart, which was 50-1. Bet it in a $2 exacta. So I went in and I bet Firing Line to win, place, and show it, and it paid pretty good. He went off at 9-1. And the exacta that I was supposed to bet was 10 and 19, but because International Star had scratched, the horse that I bet was the 18, which happened to be American Pharaoh, who was the winner. So I won the exacta on an air. and I got back for my $2. I got back $72. So that was really, really a big. I was able to eat that night, which was good. Skinny as I am, it's a good thing that I don't miss too many meals. Folks, this date of April 27th is just really big. I just can't tell you how big it is. If we close strongly above that, it's going to be Katie bar at the door would be my guess. I will have to throw my hands up, which I've done many times before with this market. But as long as we don't, go about that, it'll be really something. The Dow Jones, the New York Stock Exchange Index, we've rallied up to above the 61% retracement. We've done this many times before, folks, where we rally up for 1 or 2 days and then the market stops. So that's not unusual that happens, but it just it's just surprising. Now remember, this is a full moon day. This is the very, very beautiful full moon if you get a chance, because they're planting the crops right now. And oh, by the way, let me tell you about Thursday's show. We're going to have Rich Anderson on. And folks, we have a Gartly pattern on corn that's forming just absolutely perfectly. If we can get corn down about another 10 or 12 cents, it's down a few pennies today. But if we can get corn down another 10 or 12 cents, it's going to set up a perfectly symmetrical Gartly buy pattern. And the time for this comes in on the end of the week here, around the 8th, and so it'll be actually the 7th, and so you'll be able to really get an eye at 4th, 5th, 6th, 7th. Yeah, the 8th is Friday, and then you'll be able to take a look at that. The best time to buy it, of course, would be on Monday, the 11th, because that would be the time that you'd be wanting to, you won't have to worry about over a weekend, because they are planting the corn and beans now, but the beans are acting pretty good. They're holding up above the last week's lows. Corn is not. Corn is going down and making one more jab down, as the pattern says it should. So we'll focus on that. We'll start it out on Wednesday a little bit, but we'll go to it on Thursday with that. We're going to be looking at 2 contracts. We're going to be watching the July, which is the corn that's already in the bin that they're selling, and then we'll also be looking at the December, which is the new crop corn. That's the corn that they're planting right now. That'll be the one that is most affected by weather. If there happens to be a high pressure center come in that would cause some really bad weather, that December is what you want to look at. But we have to watch both of those. And I'm sure Andy Heck we're watching it also, because of the fact that it's a strong seasonal for the grains to bottom right into planting, and then they rally into the the growing season. So that'll be something that we want to watch with a great deal of anticipation. We have a question about Apple. I don't know I don't know how to answer this, but Apple's a great stock. You watch and see they have. I watched in China and in Hong Kong. My wife happens to be in Hong Kong right now, and Apple watches. The cheapest Apple Watch, I believe, sells for $379 in the United States, and in Hong Kong, they are double that price in U.S. dollars. In other words, you have to pay $800 for a Apple Watch if you want one in Hong Kong. Evidently, they're in limited supply because not many of them are. Well, there's been a lot of them sold, but not enough, I guess. But that's what it is. I mean, they get more free advertising than any company I've ever heard of or even thought about in the markets. It's every day there's something in the news about Apple. Their advertising department should be fired and just let the journalists take over, because, boy, they sure do a heck of a job of giving Apple all of the salutations that they should, and they do deserve them. There's no question about it. It's absolutely a fabulous product. I've never seen an Apple. I see the iPhones. I know how good they are. I know the Macs are pretty good because I have friends that use them, but frankly, I don't know too much about the watch. I have not seen anybody wearing one yet, but we'll know whether or not this is going to be happening down the road. Too much later anyway. We'll have to wait and see. Okay, now the question that I want to answer for someone was about volatility, and the answer to that is the person to ask that question, he's already off the air, but that's Basil. He knows more about volatility. He's forgot more about volatility than I know. But all I do is I watch that pattern on the VIX, and every time we get down to that level, it's been really, really something to really watch. And so we'll see if that's going to be the case. But it's made new lows again. So there's no sign of fear in the market at all. And folks, those are the kinds of things that lead to bad things happening. I think that the real key here is to watch these credit markets, watch the notes and the bonds, because the notes and the bonds are telling us that something is not right. They should not be going down like they are. The Fed has, made rates as cheap as they can. They're doing everything that they can with quantitative easing to keep rates down, and yet the market itself, the Treasury bonds, keeps going lower. Why are interest rates in Ireland and Spain and some of the other places are trading at near zero rates, whereas with ours, they're getting 2.5% and stuff like that? There's something's not right with this picture. It's probably me not seeing it right, but all I'm doing is I'm looking at the relationship here, and I said something's not right. If I had a lot of money, I wouldn't. I know quantitative easing is in Europe, coming into Europe, but that's, that they've been at lower rates before they had quantitative easing, so that's not the answer. That's not the answer. There's just something else that's there that I'm not seeing. But I believe this is the debt cycle that is going to be the harbinger of things to come. My greatest fear, and I hate to say this, but I hate to think you come in one morning and then you're not able to do anything because someone's pulled a switch somewhere and declared martial law or shut the banks down or something like that because someone couldn't make a huge payment. I know Greece is supposed to be sending that message to the markets, but whether they're going to do anything or not, one has to wait and see if it's going to be the case. That's what we really need to know. The crude oil market has, we're up near where we think could be a top in crude oil. I'll show you the picture on this because it had a really nice picture over the weekend on this was just a hourly chart, similar to that bond chart that I was looking at to show you that it was, looking to be a potential for a three drive to a top pattern in crude oil up around that $60 level. We broke off to about 58 and change today, and we're trading around 58.90 right now. So there's nothing really exciting happening there. So, but it's still what it's going to be looking at from that level. I think the most amazing thing from my perspective today is how well the market in the gold and silver exploded after being down so much, being down $30 on Friday, and then to come back and get quite a bit of it back. Didn't get all of it back, but it got quite a bit of it back. So that's the big things that is going to be watching it. So we'll keep an eye on what happens with gold and silver from this level also. Another question someone's asked me about that we've talked about on the show, and that is, owning some gold and silver. And I think the best way for folks to really learn to do this with the gold and silver is to buy some silver coins. The 1964 silver coins, they're dimes, quarters, and halves, and you can also get some silver dollars, but silver dollars are a great way to buy them because silver dollars are trading for under $20, and so you got a pure ounce of silver there. It's 90% silver. If you buy the quarters and halves are pretty hard to find, but they're still known by everyone as a piece of bullion, so that's very, very good. So you want to watch that to have some of that. I have those coins from when I was in graduate school. I mean, I was collecting them at face value, and I still have them. Each bag, I don't have as many as I used to because I had to pay some college places. Some of those places in Boston that cost a lot of money, but I still have quite a bit. But the bag weighs about 54 pounds. 54 pounds of silver is $1,000 of face value, and right now that's worth about $16,000 as I recall. Okay, we're going to take a little break here. We got the stock market still strong, but weakening a bit. We'll be right back after these few words from our sponsors.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and I posted into the Tiger TV a really bullish-looking chart. It's the banking index, the BKX. That chart, as you notice, it's had the 3 lower tops, and we broke through that last week, and we're continuing it on very strongly today. It's one of the strongest segments. That's a very, very powerful pattern, folks, and that could be, why the market's going to go a lot higher. I don't know, but it's pretty tough to be short this one. This makes it look like it wants to break out to the upside and look, very, very nice. Now, I wanted to answer one quick question that someone asked during the break here, and that was about this corn trade. I know it's a little early, but I'm going to post it in here so you can take a look at it, because this is something you really want to wait for, because you have a beautiful pattern coming in here, down about another 6 to 10 cents. We hit the 61% retracement in July corn at the 356 level. We're trading at 361 right now, so that's telling us that we want to be looking to do that. Now, as we get closer to this, and we're not quite ready because we need to go out to the 8th, which is Friday, and the way we figure that out is you just measure the highs from the high back in March to the low we made back in April. Then we rallied up into April 20th, and you count those numbers of days, and just like we did in the bonds, you count the number of days up in the move versus the number of days down in the move, and that gives you some of the symmetry that you're looking at. And then if you can put it together with a nice price, you have time and price coming together. And if you wanted to, you can wait for a little pattern like a Tweezy or a Doji, something like that. That quantifies your risk. You can wait for a breakout of the previous high the last 3 days, whatever particular method you like to do to enter, and then put your stop underneath the low and let her rip and see what happens. This is a very strong seasonal pattern, buying into the planting season and then selling it into harvest. That's one of the stronger seasonal in all commodities. It doesn't work all the time, but nothing else does either, with the exception of a few things that I have not been exposed to, but I don't know what those things are. We've had one other question. I hope we have time for it, and that is the IBB, the biotech index, has been hit pretty hard. I don't know what it's doing now because I haven't looked at it for a few days. We've come back pretty good. We didn't quite make the level that I was thinking would get down to, 324. We're trading at 347 right now. It's actually weaker than the rest of the market, but it's still bouncing back like the rest of the market. So this is all I can say is with some certainty is if we take that low out that we made Friday, we're in big trouble. Or excuse me, Thursday, we're in big trouble, because that market came off of that 618 retracement like a rocket. And usually when it does that, that tells you that it wants to go a lot higher. And if it doesn't, it's telling you that the cycle would have crested early, but it's still way too early in the game. It's a market still Dow up about 70 some points. So it's pretty difficult for it to turn around from this level, but you've got to keep an eye on it in case something like that does happen. That's the main thing that we're watching right now. So remember now, on Thursday, we're going to have Rich Anderson on. That'll be the commodity show that we have. And I'm hoping to have Arch Crawford on Wednesday's show, if at all possible. And we'll have him on to have him give us his idea of what we're looking at. I've got some other real famous guests coming up. All I got to do is work out the scheduling. One who I'm really looking forward to is having Larry Williams on. And he's been my friend for 50 years, and I'd certainly like to have him on because that boy knows his stuff. Let me tell you, he is he's the icon that everybody that trades commodities should look at. That guy really knows what he's doing. So that's primarily it for the show today. I had to mention one other thing that someone asked me that I can't remember. Oh, it was too late. Good thing I probably forgot it. Okay, folks, live every day in an attitude of gratitude, and may God bless. And do something nice for someone who has less than you today.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
You're watching Tiger TV.